So we did have earnings after the bell, so I'm going to talk about that in a little bit. But the market's pretty much, and we had Fed, obviously, it happened around 2 o'clock. You can see right about here. Yeah. So Fed came out right here, and the markets went up a little bit, and then they dropped when he started talking, when he announced, that we're not going to have a rate cut. And then he took some questions. And then as soon as he took questions, whoop, it went up. So as I've always said to you guys, there's the reaction, and then there's the reaction to the reaction, right? So that's one thing that I mentioned to you. The other thing that I mentioned is that, based on the market's reaction, yields are going to make a move one way or the other. So if you look at the 10-year Treasury yield, and this is one of the markets that we look at, there's lots of video on this. If you go back in the live archives, Wednesday, Saturday sessions, I talked about it on Saturday. I talked about it the previous Wednesday. There's tons of video if you go back and catch up. This is actually a market. I refer to this as a market. It's the 10-year yield, because this is so reflective of what's going on in the markets. It really does determine a lot of things. When yields are down, yield percent down, that means mortgages typically are less. Loans are typically less. And if mortgages are low and loans are less, guess what goes up? Small cap stocks that borrow money. Real estate stocks, home builders like XHB and ITB, these are ETFs of home construction, go up. Why? Because they can borrow money at a lower rate. So this affects aspects of the economy. It also affects high dividend stocks. High dividend stocks typically go up when yields drop. Why? Because investors dump their bonds and buy the high dividend stocks because they're going to get a better dividend holding on to McDonald's or Pepsi than they are sitting in a 4 point something percent bond. So the yield is very significant. And if you look inside of IWM, that this really affects, these small cap, mid cap stocks, the largest ETF inside of that index is KRE, which are the regional banks. And so that's hugely affected as well. And that's the trade I want to focus on tonight if this continues to drop. So what I was looking for with the Fed, and here you are once again, here is 2 o'clock. So the initial reaction is yields go up as they were going up all morning. Now they gapped down at the open. Yesterday they closed here, gapped down at the open. Over the course of the morning, price moved all the way up to close that gap. Pulled back a little bit. Then the Fed announcement came here, went up, and then he opened his mouth and down it. And that's what I was looking for. What is going to be the reaction? And so the reaction, what it appears to be as of right now, is this. This is the prevalent action, is that yields look like they're probably going to continue to pull back. You could look here on the hourly. This is a 15-minute chart. You can see the hourly pullback right there, the red candle. And then if I look at the daily chart, you can see yields have been going higher and higher, which is not what Powell wanted. You would think if he's cutting rates that the yields would come down. Well, this has to do with the economy. The fears in the economy. There are fears of recession and the fears of reinflation cause yields to go higher and higher. Not what the Fed wanted. But then all of a sudden, yields got a little toppy. Inflation came down ever so slightly. The dollar started to come down. Trump in office looked like Trump was going to win. And then all of a sudden, the dollar and yields start to come down. Now, if yields start to come down, I like trading IWM, KRE, XHB, home builders, IYR, real estate. I like trading these to the upside. Maybe even Something like Pepsi, Costco, McDonald's, Altria, these are all high dividend stocks, right? And so this is these are some of the trades that I look at. And so while I'm watching this come down over the last week or so, I know there's a Fed announcement coming. So I want to see what happens after the Fed announcement. If this continues to go down, then that gives me the confirmation that I need to take a few trade, or at least to look at the setup on something like KRE, IWM, and so forth. So it looks like it may be doing that. We'll see tomorrow if yields continue to go lower. If they do, it sets up a trade for me. So let's look at IWM first. See if it'll even come up. It was not populating before. Yeah, I don't know why it's not doing that. Yeah, and I don't want to. What I can tell you in IWM is that it's been trading. It's been trading in a channel like this, in between two moving averages. It's still stuck there, so I don't think I want to trade it. But KRE, the regional banks, now this is interesting, right? So you've got this kind of bottoming thing going on here. Make a little bit of a high there. You take out that high, right? So that becomes a higher high. That becomes a higher high. That becomes just about a higher high. So you got lower lows, lower highs. You do see kind of a reversal off the bottom. This is the mid of the Bollingers, these pink crosses. That's the mid, otherwise known as the 20-period simple. And so price is above that. That's good. When price is above the mid of the Bollingers, there's a good chance that price will head up towards the upper Bollinger Band. When price is below the mid, it breaks the mid, price typically works its way down to the lower part of the Bollinger Band. And you can see here how it chopped, pulled back, broke, and now it's been going up. But look at the trajectory of the Bollingers. Look how they just opened up to allow price to go higher. And now you're above the 50. Just barely though, right? So what will happen if yields go down tomorrow? This should get over the 50-period moving average. I'd like to get a closing candle above here. So I'll kind of look at the hourly chart to see if I can get a closing candle. So what is the 50 here? It's 63.60. Yeah, somewhere around there. So where is 63.60? 63.60 is like right about here. So I like the mid there, 63.70. Let's see. Yeah, the mid is 63.69. So I'm going to say 63.70. I'll be somewhat conservative. I'm just going to throw this on there. If I get an hourly close, if I get yields to go down, first thing, yields down. If yields continue to go lower and I get an hourly close of KRE above this level, then I'm going to go ahead and buy something. I don't know what it is, but probably like the 64, 66, debit spread, something like that. I think calls are going to be too expensive. So I'll do some kind of vertical up here and see if we can get this thing going higher as yields go lower. Yield up, SPY down. Not necessarily. The indicator that runs the SPY, chucklehead, is the VIX. So we'll just look at a couple of other, and I'll show you that in a second. Let me just go through a couple of other indicators here. Well, markets first. So the dollar, I'm not going to, oops, I didn't do it right. DXY. So here's the US dollar, same thing. Dollar going higher and higher. That is not good for our exports because that means other currency is lower. But now you start to see the dollar break down. And if you can see the 50-period simple. So if we see the dollar reaction after the Fed, what is that reaction? And so you can see right here, dollar has been coming down. So again, Fed reaction. Initial reaction of the Fed was the dollar went up until we got the reaction to the reaction and the dollar went down. And then it continued to go down for the rest of the day. That to me signals the dollar is going to continue going lower. If tomorrow it continues lower and breaks the 50, that opens the door to dollar sensitive trades. So what stocks, ETFs, what markets go up when the dollar goes down? Well, typically commodities do. The number one commodity goes down is gold. So we started looking at GDX today in the legacy room. I'm going to show you that chart. You could look at silver, you could look at XME, you could look at palladium. Commodities typically do really well as the dollar goes down. The other thing that does really well when the dollar goes down are Chinese stocks. So we looked at the large cap ETF called FXI. We put some trades on there. BABA is the big one, so you could put on a trade on BABA, put it out into February. If the dollar continues to go down, these stocks will pop along with gold. So let's just check that. GDX, that's the miners. Now, if I look at the chart of the miners, very interesting. You'll see this is the 100 period moving average. This is the 200 period moving average. You see how we've been kind of trapped in this zone right in here? Ready to break out, isn't it? It looks like it wants to break out to the upside. It's not oversold. It's not overbought. It looks like it wants to break the mid of the weekly chart. If it does, that should send it up to the upper Bollinger Band. So that puts you at least up to 45, 46, 47 bucks, somewhere in that range. That's a $10 move for GDX, right? Momentum is on the upswing here. So I'd love to see the dollar prove to me that it's going lower. And if it does, that should put GDX right above there, open Bollinger for the next move higher. So for those reasons, I like it. Here's BABA. Baba's going to wait too. There's a couple of charts that just are stuck. Tesla, Apple, not quite sure why. Let's try FXI and see if I can get that. This is close approximation of what BABA looks like. So this may look a little extended, and it is. So if you're wondering, well, is there more room to go? You should look at the RSI indicator. Is it completely overbought already? Not quite. There is room to go on the RSI, at least the daily, and the Bollinger is widening, so there is more room here. To be certain, you come to the weekly, and you can see that that's not even nearly overbought, and you got plenty of room between where it is now and the upper Bollinger Band. There is room. So even though it looks extended, there is room here. So I went with some February calls on FXI. If you're in Legacy, you got those alerts. So Chinese stocks, GDX, industrials do really well also as far as dollar sensitive trades. Now, someone knows the VIX. So let's talk about the VIX. Well, it'll at least retest the previous high, at the very least. So the VIX is the indicator, the number one indicator, that will determine what the indexes do. When the VIX spikes, there are the most important, the heaviest algorithms that are written to react to indicators are the algorithms written for the indexes or indices, the SPY and the Qs specifically. If the VIX goes up, the SPY is going down. It's pretty much, that's the way it works. I'll show you some, I do this all the time, but it never gets old. So we'll look at it. Unfortunately, we're not going to be able to look at it with Apple. So let's edit the symbol. So here I'm going to put in the first symbol, I'll put the VIX. And in the second symbol, I'm going to put the SPY. Just to see if you can see what I'm saying in terms of algorithmically. Let's see. It's not perfect, but you can see, right? As soon as the VIX starts to go, it kicks on the algos, down goes the SPY. As soon as you get a topping candle and you start to see a little bit of a drop in the VIX and it takes out the previous one, there's your buy signal to go higher. So you can see how it's kind of a, you know, VIX goes higher, SPY goes lower. VIX goes lower, SPY goes higher. VIX goes higher, SPY goes lower. You know, gap down in the VIX, gap up in the SPY. All right, so this is an algorithmic relationship. So when we watch the VIX and we watch the SPY, and we're wondering, the SPY and the Qs for that matter, can we trade SPY to the upside? Should we trade SPY to the downside? What should we do? You got to consult the VIX. And so what is the VIX? The VIX is consists of really traders and investors that are a bit frightened that the markets might drop. Because if they do, their investors will lose money. Their funds will lose money. Their stock holdings will lose money. Well, they're not going to, well, why not just dump the stock before that happens? Well, you're not going to just dump the stock because you wouldn't do that. What do? You hedge. How do you hedge? You buy out of the money calls on the VIX. And when you buy out of the money calls on the VIX, the algos kick into gear and the market maker buys it up and up goes the VIX. So up goes the VIX means that there are investors that are hedging. If investors are hedging, they probably know something that we don't. Might be a good time to think about getting out of long positions or maybe switching over to puts. As soon as all is safe in the water in terms of the investors are concerned, maybe they're past a specific event or a certain level's been breached or a certain number of calls and puts have shifted, they start taking those hedges off. And when they take those hedges off, the VIX drops. When the VIX drops, it kicks on buying algorithms to buy the SPY. You see that? That is the algorithmic relationship between the VIX and our biggest market called the SPY. So when someone will ask me something like, where was that question? Can you explain why the VIX dropped to 16 after Powell's talk? Well, I think you mean right here, right? Yeah, this initial drop here. Yeah. So there was a rotation in the markets, and there was initially you saw investors getting a little nervous, but not so nervous that they need to be heavy into the VIX. So they took some of their hedges off, and so down it comes. And so there at least was news there that they're not going to raise rates, of course, right? And inflation, yes, but not like crazy out of control. So whatever news investors heard, it didn't put them in a pickle to the point where they're thinking, wow, we really need to keep our hedges on. Now, there are still a lot of hedges on. It did slide, but you can see at the end of the day, it came back up. And so what they're waiting for is they want to see the reaction of Meta. They want to see the reaction of Microsoft. They want to see what Tesla does. And you can see Meta already was up a bit and then pulled back. I think at the time I looked, they were up about maybe 2% or so. They were up a whole lot more. They're up to like $716, and then they pulled back. Microsoft looked like it was down initially in the aftermarket. So there's going to be some mixed readings. There are always correlations, Texas E. The only one that you really need to be concerned about as it relates to the SPY is the VIX. And it has always been the VIX. Because the SPY has specific algos tied just to the VIX.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below. Thanks again for watching. We'll see you at the next video.